What is going on, investors? Back again. Time to talk about Zoom Video Communications, better known as Zoom Video, ticker symbol ZM. The stock is popping in the after hours. Can't see it on that screen, but the stock traded today, ended about $410 per share. We're seeing right now $440 per share. So it's adding about $30 in the after hour sessions. And you might ask why. That is because they reported earnings after the bell today. EPS beat on revenue. I think the key thing is that they gave some full fiscal year guidance here for 2022. That's the upcoming year for them. And they're saying they're expecting revenues to be between $3.7 billion. And we see here for the full year in this year, they made $2.6 billion. So Zoom Video is already anticipating bolting on another $1 billion to their revenue next year. That would basically very close to being giving them a $1 billion run rate per quarter on their revenue. I think that is guiding these shares up. When we get over to the stock chart, we'll talk about what ranges we have here. If Zoom Video were to pop up, what could you do? If it were to drop back down, what could you do with this one? Now, if you do me a favor, if you like what we're doing here on the Investor Channel, maybe consider subscribing. Check out some of my other videos. I know it's quite a commitment. Consider subscribing. Those of you that are already subscribed, please maybe consider hitting the like button as well. It does help the channel out. Now let's get into the numbers. No more wasting time. 3 months ended here, 20 over 21. They just finished their 2021 quarter. It's a little confusing. They're basically in fiscal 2022. I don't necessarily like it when companies do this. They're basically a year ahead, but just saying that to end any confusion. So here's the end of 2020. Here's the end of 2021. We're now in 2022 quarter or fiscal year for Zoom Video. Hopefully that makes sense. We've got a revenue here on the top line. Oh, they went from 188 up to 882 over the last year. And you got to love these gross margins. Take a look. Cost of revenue right here. 32 million in the previous quarter, 267. So we spent 267 minus this 882. That gets us a gross profit of just $615 million. And I say just, kind of kidding, because those are phenomenal gross margins. People ask me all the time, what do I look for in companies? How do I pick companies that I want to invest in? I'll tell you what, one of the first things I look for is massive gross profit. Now, not all sectors, not all companies have this, but in the tech sector especially, you need to have these big, gigantic gross margins, and this company does. Take a look for the full year. We spent $821 million to make this $2.65 billion. That means we gross out $1.8 billion. You can imagine, like they said, you're expecting about $1 billion more on this top line. You can imagine that this bottom line, or this gross profit line, it's not quite the bottom line, will add considerable amounts of money, because this cost of revenue will likely stay in check and the margins will remain. So moving on, look, they got more expenses. I wish that was the only expenses they got at Zoom Video. We got R&D, we got sales and marketing, we got general administrative. We'll talk about in a minute how a lot of these costs are priced stock-based compensation. When we get over to the cash flows here in a minute, we'll take a look at that. They probably break it out. No, they don't break it out down here. So we'll talk about that when we get to cash flows. But let's just assume this is all cash. You got to pay your employees some way, and they're paying them in cash and in Zoom Video shares. You see here, total operating expenses last quarter or in the previous year period was 145, ticked up to 359. Okay, when you grow your top line and your gross profit number this much, I would say to only double your operating expenses, it's a little more than a double. That's not too bad. Take a look. So here's income from operations. This is factoring in all expenses. We went from $10.5 million all the way up to $256 million. You on this kind of run rate next year, yes, you would clear $1 billion from income from operations. Now, for the full year, not quite there yet. Our total expenses came in at $1.1 billion. That means we cleared about $660 million from the income side. Now, this company has $100 billion market cap, so we're paying way over like 100 times earnings for this one. Just something that you probably want to factor into your valuations. But when this company is growing as fast as it is, investors tend to pay up for this type of thing. Now, moving on to the statement of cash flows, what I talked about here is we pull down this net income number. So here's our net income number. Actually, our net income's right here. And so we factor in some income taxes here. It's not much for this company. And so here's our net income number for the year. Here's our net income number for the quarter. We pull that down here. And so we have that number here. And then guess what we get to do? We get to add back in our stock-based compensation expense, because I would imagine that is the largest expense you see for the full year. It was $275 million just for the quarter, almost $100 million. And then you get a sense of net cash provided by the operating activities, $1.4 billion. So you could imagine, as we bolt on more operating income next year, more net income next year for Zoom Video, this net cash provided by operating activities probably going to skyrocket even more. You see in the quarter, it was up basically tenfold. We were at 36 million up to $400 million. Just absolutely phenomenal from a cash flow perspective. The previous year, look, they actually did pretty well. Obviously cleared over nearly $1.5 billion on the cash flow side. Last thing I want to show you is the balance sheet. So here's our balance sheet here. I want to show you how crystal clean this is, okay? Here's our marketable securities and our cash and cash equivalents, about I'll call that $4.5 billion. We'll round up a little bit, got a little bit in receivables. Total current assets ticked up like over $3.7 billion. That is massive. Total assets went from 1.2 to 5.2. Just absolutely phenomenal growth there. Now you got to assume total liabilities probably increased a little bit. Yes, they did. They went from 455 million up to 1.4 billion. They basically ticked up $1 billion. But take a look. Our total assets are 1.4 billion, and we have $4.2 billion in cash. What is this showing me? Not only this, but the strong cash flows that this company generates, $1.4 billion in a quarter, in a year, $400 million in a quarter. This company is not in any need for cash. That means secondary offerings, more issuance of shares, issuance of debt, things like that, I would say are not likely unless they decide to do acquisitions at this company, which could be possible. Now, we talked about how this stock was at about $410 at the close today. I've had these lines in for a while. Ironically, this one right at $450 is a resistance level. You see here, it kind of peaked out here. I think this is where the key level is here. We broke above 450 for just a brief moment and came crashing down. Same thing here. This was just a couple weeks ago. Actually, probably only about 2 weeks ago. We were at 450 and the stock sold all the way down to, about $370 per share. Here we are at 450. Two things can happen, high probability of happening here. And we either peek our head over like we did here, several months ago. This was back in November. We peek our head up over here and it gets rejected in the 470, 480 range. Okay. Any momentum over this candle at about $480, $485 per share, these highs probably come back into play. That's north of $500. Now, the second thing that could happen, and honestly, I think both of these have somewhat equal probability of occurring, is we top out just like we did here, and the stock comes back down. So a couple ways you can play this. If you have Zoom Video shares, you want to take profits, this is not a bad area to see what happens here. Okay, I think that at 450, you could start trailing stopping out of this stock at 450, because then if it keeps walking up, it walks all the way back up here to these previous highs into the 550s, 560s even, well, you can trailing stop as this stock would eventually take a breather. Now, the other way to play it is if you want to go long Zoom Video, you don't have any shares, or you want to add to the ones you got, I'd wait and see what happens here. Okay, this 450 level, if we break above it, I wouldn't worry. I wouldn't start chasing it, because chances are you would get some kind of breather, just like we did here. The stock broke up above here, went to all-time highs, came back to 450, and then actually bounced. Okay, so this 450, if we break above it, should act as some support on the way down, again, unless you see this type of event. Now, if this stock does get rejected here at 450 and it comes back down here to the 370-ish range, my opinion, could be a buying opportunity. You'd have to evaluate your situation at that time. But Balance sheet is absolutely sensational. Revenue and revenue growth is looking good. The guidance heading into next year looking good. Obviously, we're kind of past the explosive growth days, but still guiding to very strong revenue growth. From a valuation perspective, especially a price to earnings, price to sales, I mean, it's completely out of whack. You kind of have to put that aside. Now, from a cash flows perspective, really strong at Zoom Video. So I like this stock, not one that I own, but obviously one that has been a great performer, up 250% over the last year. I would consider this stock a good buy if you have a long-term outlook and you buy it at the right price. So hopefully you guys enjoyed this one. We'll be back again soon with more videos. Good luck with your investments.